right, Devils, how we doing? Sam here with you on what are we? Friday, November 9th. We're kind of late getting started here today. It's middle of the day here. I've just had some other things going on, so I wanted to get this update done for members, and eventually we'll get this up on YouTube. So here we are sitting with Bitcoin. So it's Friday. We're going to look at Bitcoin, and there's not a whole lot I can do to update you here. So I thought I would use the time here as an opportunity, maybe show you a new tool that you hadn't considered looking at before. Now, anyone who follows me, the members or people on YouTube, you know I'm a huge fan of the median lines, right? So the Pitchfork, Andrews median lines, whatever you want to call them, because these are, of course, I would tell you that if I had to prioritize my technical tools, this would be one of the two that I couldn't live without, right? I wouldn't want to trade without the median lines, right? It's interesting, as I've said this before, it's probably the most underutilized technical tool amongst all technicians. It's kind of surprising. It's in every charting package will have Pitchfork or median lines, yet very few people actually use them, which is always surprising to me. Consider them. Thank you very much. We'll continue to use them. That'll be our advantage. And it's the reason people always ask me, what's the deal? What's the deal with the devil thing, right? It was nothing more than my one, kind of looking for a brand that was available, and then two, wanting to get pitchforks into it. So that's how I ended up with that. Nothing more than that for any of you thinking otherwise. So let's just show this here. So what I thought I would do here. So if we were looking at median lines here, we're trying to draw them here. So I'm going to show. Well, let me try and show you the difference here. So let me go back to original here. So here's original, right? We all know the idea here is we get three pivots, and we can track them here, and we get a leading indicator, because the idea is if this pivot holds, we have an 80% probability of making the median line. Now, we don't know when, we just know that 80% holds, and as I've said here, I don't know how many hundreds of times, that is the single best odds in trading. There is no trade you can set up with higher probability of completion than the median line trade. It's number one with a bullet. Okay, now you can add to that the algo pulls that we use, so here's the golden corner pocket. Here would be a corner pocket at the 50. Now, a corner pocket we can go deep. It can go we can have a double bottom down here. It doesn't have to hold here at the 618. That's just the sweet one. There you're right in the golden zone here, so that sets you up for this move here. We get the algo target right at the median line. Now, just because that algo target is there doesn't mean we go straight to it, right? We could meander past it here. It doesn't necessarily mean that that's the time that we're going to get there, that we're going to go straight to that on that time frame. It's just we know that algo target's going to be there, but we've got second target, we got third targets, we got plenty of targets where that could go. Again, it's 80% of making the median line. It could take a year to get there, but that 80% holds as long as this pivot doesn't break. Now, so that is, again, as I've said many times before, if I had to use only two tools, I'd leave the Elliott Wave. I would just work with these two things, just fib retracements and median lines. I say these things all the time. If you just focused on those two technical components, you have with good money management, you'd have a very successful trading career. It's that pervasive in the market. Well, let's look at some of the modifiers here, because many people don't consider using these. So I have demonstrated a few things here, but let me just go over this again here. So if we go to the modifiers here, now it's kind of nice here in this latest version here, we have all of our modifiers right here, just so by just highlighting and then right clicking, I get all my modifiers here. So if I go to shift, so note this here, what happens with shifts. Let me get this down. Shift, we're just going up 50% in time. So we're taking exactly 50% of the distance from swing low to swing high. So if I were to draw that up here, if you were to look at this from swing low, if I just bring it over here to swing high, so here's the 50, right? So all it's doing is taking the median line up 50%. Now, if we go to a modified shift, wrong one. Let's get that hot. Now, if we go to modified shift, we've gone up 50% and over 50% in time, right? So it's 50% further, so it's taking this distance in time. We're putting the median line 50% further. You can see the prices here. So it's 50% up, 50% over. But it's also identical. I've shown this many times. It's identical to a channel. Right? So if you If you like to use a channel, your center line of your channel, I'm not right on it, but you get the idea. Your center line of that channel becomes your median line. All right, so let's get this. We're not right smack dab on it. And if you're using the modified shift, you don't need to put a channel on because you've got this, so it's just redundant. So you don't need to use that here. So that's just something that a lot of people aren't aware of it until you actually overlap the two and you realize, oh shit, I got a channel. So now the other one that people rarely look at is the inside. All right, the inside. So in an inside channel, I guess we'll take this channel off. In an inside, we are taking 50%. So if this is our x-axis and this is our y-axis, we're taking 50% of the x and 50% of the y. So if you look at what that's doing for us here, so mostly when we're looking at a retracement, we're anticipating this action. But if we don't get that and we're going to continue moving lower, well, then we have a channeling tool that we can apply to a market, and you can probably see where I'm going with this, right? So if we start looking at where we might be going, you see how this can potentially be coming into play, which we're going to demonstrate here. So with the market sitting right here doing, shit, how long have we been here? So when is this range defined? In August? Yeah, we've had a move up, but this, well, I guess we'll call it September, right? So we've been here for a couple of months, just going sideways, and we're sitting here literally splitting the range. So now, of course, the anticipation is one of these is going to break, right? So eventually, one of them is going to break, and right. So we all anticipate the break is going this way. Well, maybe not all of us, right? But that's the natural tendency is that the break is higher because we're optimistic or we're bullish of crypto. If you're watching this video, that's likely your assumption here that we're going to break. Certainly going to break out of this channel. But I've also demonstrated many times here that we have a whole lot of algo pulls that are pointing lower. So that doesn't necessarily mean that they all have to be realized. Again, I've shown these I don't know how many times. Right, they're all here. So we're creating, and we've got this particularly good overlap down here where we have the larger degree primary target at 23.6, and then we've got the second target here of the negative 618 from this smaller pull. So we've got nice confluence down here. So that would, we'll call it 5,300, 5,200, right in that range. So you can't ignore those just because we're range bound here and we all kind of want to see it break higher. We got to remember that these are there. Now, the good news for bulls is that if we do start to move higher and we're going to come out of this, this is all fuel for us as short covering starts to kick. So the stops that will be here, those are buy orders, right? Stops will be here are buy orders. So as shorts cover, there's potential fuel. But we sure don't look like we're going anywhere soon, right? It looks more like we could be heading down to one of these. So we've got to recognize that's a very real possibility and look at what tools can I use to help me identify where I'm likely going next. Well, again, I take you to the inside Pitchfork. All right, so let me do it this way. So let's go back to original. All right, so this is often what people do is here they'll start here and they'll go, all right, I got something there. So I'm going to put my Pitchfork on there, and you go, well, let's see if we get it right on there. All right, and you go, all right, God, that trade devil guy did say this was pretty amazing. All right, so there's a perfect tick in the median line. So we have, and this is one of the huge components of our teaching is we take you through all of and force you to, if you're in our belt program here, that's a huge part of your early belt testing is memorizing and being fluent with Andrew's median line trading principles. This is one of them, that a tag of the median line, very often a pivot will be made as we tag the median line, right? So that's why we're always looking for that, looking for a potential reaction. So there's a pretty good example of it. So with that off of that, well, now you look at that and you go, okay, well, that was great. How's that helping me over here? Well, it's not, right? So what we can do is start looking at the modifiers. So you might put the shift on and go, well, that's not doing much for me. Actually, I'm going to have to go the other direction. So since we're going up and down, so I'm going to take this swing up to this swing high. I'll take the first one down here. So we get that. It's not helping me. I'd look at this one here. All right, so since this is a slightly lower low, I would use that. Okay, so you see what we've got here? So here's 50% over, 50%. So 50% of the x-axis, 50% of the y-axis. All right, so that's kind of interesting. It's not a to the tick tag, but it's there, and it's giving us, it's letting the market frame this. So we now note here, look what happens as we get often called the kiss goodbye, as we tag. So you could have just drawn this trend line here, connecting these two pivots. The fact that we tag this before we move away, potentially, that's your kiss goodbye. Hang on one sec. Okay, I'm back. All right, so that's something to take note of. Now, of course, you can get your, if we go to settings here, we could get a 200 on that. Let's get a 2, come here, and a 1.5. See how that helps us. All right, so take note here. So again, the market is framing the geometry, right? The market defines those pivots, obviously here. Look what we're doing right at the 200%. So if we're going to come down and get through that, well, then I wouldn't keep going 2, 3, 4. I suppose you could, right? So always looking for confluence, right? In unusual places. So the fact that we're holding here, somewhat interesting, but I've got the opportunity to draw this again and again. So since we've got that identified here, we know, so I'm going to take it off here so I don't clutter the chart, but if I would encourage you to have, so if you had a quad split of your screen, so something like this here, so you might have that on one, another on another, so you don't lose track of them. So I might then looking here, so because I've got this possibility again, I would look again and say, well, it looks like I've got something similar here. So if I take that swing and I come down to this pivot here, excuse me, maybe I've got something else. So let me take this one off. All right, so here's my, get this, I'm just clearing this up. All right, so there's the swing. Here's our pivot. Now, do I have anything from this pivot here? Maybe a fib confluence here? Well, right to the golden zone there. So, all right, so we tag the 618. So from this swing low just to this swing high, right on it. So there's our tag of the golden zone. We didn't quite get to the median line here, but it's interesting how it seems to frame it. Now, if this comes down, well, let's use this. If we come down yet further, this would be a natural place to be looking for potentially some confluence. So here we might be tagging as we hit the 786. Right, look where that algo target now sits. Right, so there's just a couple of different ways that you can use that, and I don't think I've ever demonstrated it before, so I thought it would be a good chance to just show you another tool that you can use in that search for confluence. So here now, and you could actually use these two together. So we could look at this one here that we had on before. Swing low, swing high, here. Again, looking for confluence. Right, so look here now how we get, let me take this off. So we test, so look, it always surprises me. All right, so look here how we get this little zone right here where we're tagging those two median lines. All right, I know you can say it's probably just coincidence, right? Feel free to continue to think that. Probably just coincidence, right? So it's just one other tool to look for confluence there. Now we've got it again here as we've just tagged the 618. It looks like it might be a tick or two shy of it. But you're certainly at a potential support zone there with that median line sitting underneath. Now, if we're going to, as I just showed you, if we're going to come off of that and then come down again, that's not an unreasonable place to be looking for some confluence and potentially a reaction that would take us up there. And of course, you can just, anytime you've got a retracement up or down where you don't get, remember with the original, we're always anticipating a move higher. So let me get, the anticipation is that I've got an internal retracement. So the idea being I've got a swing and then I've got an internal retracement relative to that swing. So from high to low, I'm internal. Now it can go down here. So this goes right with it. And then as I've said many times, as long as you get a pivot that holds here, right? So if we can identify these, so thus something like a 618 is ideally suited, as that's a natural area for us to find support from a variety of sources, right? Every guy who's ever read anything about, every trader who's ever read anything about the Fibonacci sequence is likely aware of that 618, and the algo traders know that we're here. We've got to give that to the 6.5. So if we come down into that distance between the 618 and the 6.5, we're in the golden zone. So it sets up what I call the golden corner pocket, right? So we have that 80% probability if that pivot holds. That is the key. Now, if this pivot holds, we have an 80% probability of making the median line. We don't know when it's going to get there. And we do have this time component here. Might take its sweet time. Get up here at the negative 100. Might be a straight shot here. Often what you'll see is if we're going to if that's going to hold and we're going to get the median line, we'll get it right at the algo target. And that'll set up the 3, 4, and 5 that would get us up there. So you might have a 1, 2, and then this being the impulse of the third. So that's how we use those median lines looking for, and it could be something like this, could go higher. It just, at some point, we have that probability of making the median line. All right, so there is no other place in trading, I don't care what you're using or what you're doing, where you get those odds. It doesn't exist. If it did, I'd share it with you. It's not there. That's number one with a bullet, highest odds. All right, so do these variables offer us anything? Well, again, I'll let you draw your own conclusions there. Now, sure, that's a lot of lines, and again, I know skeptics. Oh man, you put enough lines up there, you can hit something somewhere. Yeah, probably right. Probably right. All right. My suggestion is not to be trading these by themselves. There's always got to be confluence, right? So one median line pivot is not enough by itself. One median line pivot with an algo target or a retracement target or an alternate price projection is enough to support that idea that I've got confluence. I know you could add some volume profile. You could add a number of things you could add to continue to add to that confluence point, which does nothing other than give you a probability zone. So the fact that we have this, so with an inside pitchfork here, so let me take the big one off here so you can see this. So with an inside pitchfork here, if we tag that median line, that's another contender. Now, note we do potentially have it again. So if let's take this one off here. So I could do it again. So I can go from this swing high, this swing low. All right. So if we're going to continue, let me open this up a little bit. So if we're going to continue lower, let's tighten up here. If we're going to continue lower, we have this channel that the market is framing for us. Now the assumption is that this pivot is solid here. We don't know. This could keep going, and we stay with that. So we get that channeling effect here. So again, trying to put that together here. All right, so we've actually had just a slight break of the 65. So this could be going to the 786. Actually, right, very well could be. So do you note here now how we get this channel that's supporting it down? So it's another technical tool that you can use in the search for confluence that other traders. Right. So I ask all of you, how many of you have put that inside on, or we're kind of looking through your options with median lines, and you threw up the inside, and you're like, oh, what the hell is that? Oh shit, I don't even know what that is or how to use it. Well, there you go. Right. So that hopefully that's something else I can show you that has value. Right. It's. I mean, there's definitely a place for it, but it tends to be most useful when we're anticipating the break this way and we don't get it. We continue to channel lower. That's where it's most effective. Of course, you can do it up or down. Here, I'm just demonstrating the internal retracement being within the A to the B. This could just keep going, right? So if we went lower, I get that same channel. So you might anticipate something like this, maybe a move back to the median line, a move lower. If you go through the median line, you might catch the upper boundary, then maybe back to the median line, then maybe you go. So a break here, break the 200, now you're on your way. Just another way to frame the market, and again, look for confluence. If you can't find it, here's just another tool to help you look for. So if this is coming back, so let's see if we can put together a trade here, a short side. On the short side, if we hit this in this little pocket here, well, there's my 38, my median line. So if this comes back up this direction here and we tag that would be an area to be looking for some sort of a reaction. There's the algo target right there. Right, so tagging the median line, at the 38, could go to the 50, right? You're in that zone where we're looking for that sell. A tag in the median line could be just it, of the inside pitchfork. I've got that right on there. Right, so hopefully you get the idea there. Right, so it can be used in a lot of different scenarios. It's a useful tool. If you've not used it before, it's one more thing to consider, but it's ideally suited for that circumstance where you're anticipating the break up from the traditional. You're looking for that move up that fails, right? So this you're anticipating to go here. If it fails, well, then you can switch to the inside and look for that channel. If I can get it hot, look for that channel to offer you guidance as to where we might be going if we're going to stay in this lower progression. All right, so all potential targets here, right? And you don't put the 2 and the 1.5 on until you break, right? And then you look at, well, do I have a runner? Do I have a parallel line that might be there as a runner? All right, so just another way to look at it. Should give you guys some things to chew on, as there's not much to contribute. So just thought I would use it as an educational moment rather than here's the next trade. All right, guys, with that, I'll wrap.